Hello everyone and welcome back to OAG's latest webinar. This is a little bonus one that we wanted to just slot in because we recognise that a couple of months back there's some interesting things happening in the Australian aviation market. Little did we know that there would be lots more interesting things happening, but I guess that's just how our industry has evolved. So we'll get into some of that as we go. So headlines, we're here to talk about Australia today, but actually we can't ignore what's happening in the rest of the world. So we're going to get into a little bit of that. To explore that, I'm joined by a very competent panel of two speakers. We've got John Grant, who, as ever, OAG's Chief Analyst, here to talk about what's happening in the industry and share his thoughts and opinions and views on that. And we're really happy to be also joined, a return from, I think, maybe January 2024 might have been the last time Simon was with us. Simon's got a new job since then. Simon Westaway, he's the Chief Executive Officer at the Australian Airports Association. I can think of hardly anyone else who would fit the bill better for this role. Simon's got decades of experience in the industry, and yeah, we're looking forward to hearing your thoughts and insights today. So welcome, John and Simon.
Thank you.
Oh, thank you very much. Very kind words. I'm really pleased to be back. I follow deeply what you guys are up to. So it should be hopefully a great chat, and we'll do our best to unpeel the onion that's
yeah, for sure. And we'll not get too distracted by the sunshine behind you, Simon, because it just looks like it's a glorious day in your part of the world.
Having a nice autumn. Not in all parts of the country. Actually, we've got flooding, a major flooding in other parts of the country. Australia's such a big place, as you're well aware, and your viewers are well aware. So they've got land of pouring rains and floods, and then we've just had beautiful sunshine here. And I'm in the nation's capital today, Canberra. It's been pretty hectic up on the hill, couple of kilometres away, and there's a lot going on in Australia at the moment, and a lot of eyes are obviously what's occurring in the Middle East.
I think that's the challenge, isn't it? That actually it almost feels a little bit like we're back in the cycle we all dreaded during the pandemic, where we weren't sort of quite sure what each day or what each hour of the day might bring. So yeah, I guess from that perspective, we've all baked in that experience now, haven't we? So switching into that mode is something that I wouldn't say it comes naturally, but it's certainly something we've all had to do. And we can't, as I said, we can't avoid talking about what's going on in the Middle East. I guess what I wanted to say firstly is that we're very conscious that right across the industry, many industry colleagues are working above and beyond at the moment to deal with what's going on in their part of the industry. There are still many people stranded as a result of the outbreak of war in the Middle East. And it seems that that's going to carry on for some time yet. And we'll talk a bit about some of the reasons why. And Australia is particularly relevant, I guess, in that the Middle East is a core routing point. So some headlines from us, just trying to sort of unpick the scale of the challenge and the issue. We obviously saw war essentially break out about 10 days ago now between Israel and the US and Iran. And there are a whole lot of countries in the Middle East obviously caught in the crossfire of that. If we look on the chart on the top right here, this is capacity by region in February 26. The Middle East accounts for about 5% of global capacity, but as we'll come to see, has a more significant impact in terms of the flow of traffic globally, because it's become such a key connecting hub. We just wanted to give a sort of headline as well in terms of last year capacity by country across the Middle East. United Arab Emirates is by far the biggest, although Saudi and Qatar also are important shares. And then we've sort of repurposed some slides some charts that we used in a slide deck that we talked about last September on this webinar series, where we looked at the sort of power and scale of the connecting hubs in the Middle East. What this one shows is that for the Middle East countries, their capacity by region. And so the first one here, the kind of greeny color, is Asia. Europe is orange, and the Middle East is the remainder. So you can see for those big markets, UAE, Saudi, and Qatar, that actually somewhere in the region for the UAE and Qatar particularly, 55-60% of their capacity is tied up in connecting passengers between Asia and Europe. Hence the significant disruption to capacity or to passengers and travel.
You're forgetting, of course, the India to the US market. The African connecting market that flows through those places, the traders who are going back and forth. It's a mess. There's no other way to describe it. It's carnage, and you can't see it changing very soon. As you saw, it was 8.1 million seats. I estimate that's probably about 7 million people whose travel plans were disrupted in 10 days, 700,000 a day. 65 flights a day from the United Kingdom to the Middle East alone. It's been horrendous for everyone who's been caught up in this, whether you're stuck in what was an idyllic beach in Thailand or you're trying to get back from the United Kingdom to Australia. It's really, really difficult. And Simon, I suspect same issues at your end of the world.
Yeah, absolutely. It's if you like, the Australia Middle East route through to Europe is a significant sector now for us. I mean, Australian international flights are back, right? And international both capacity, demand, and obviously the delivery of that's been significant. 157 return flights a week on average now through that Middle Eastern corridor. The three principal carriers, Emirates, Etihad, and Qatar. Obviously, Qatar is starting to really start to emerge in our country. Emirates is still the preeminent of those three airlines, but Etihad still has very, very strong capacity, as you're well aware. So it's a big part of what we do internationally. Obviously, that connection through to Asia via the Singapore Changi hub, that amazing airport, still is obviously preeminent and very strong. And we obviously have a lot of services trans-Pacific, and we have a lot of international into Southeast Asia, obviously, as you're well aware. So, but it's been a big impact. There's 120 plus thousand Australians who live in that broader Gulf area. At last count, the Australian government believe there's around about 13,000 Australians still keen to registered through our Department of Foreign Affairs and Trade, still registered to and want to get out if it's convenient to do so. Around about 3,000 Australians have been able to be moved back here since the outbreak a bit over a week ago.
Yeah. I think we'll come back to the specifics for Australia in a minute, but your point, John, about the kind of interrelationship, whilst the sort of headline, 5% of global capacity, actually, if you look at the top 20 global traffic flows across by those kind of traffic flows, 9 of 20 of them, so almost half, involve the Middle East in some way or another. So 20% of traffic globally. And actually that sort of Asia Pacific, incorporating Australia to Europe, was a key target market for the the Gulf carriers. And if you look, you just have to look at the visual of their the route networks. This is Emirates and Fly Dubai on the left, and Qatar on the right. That it is about facilitating that connectivity, you know, from both east to west, west to east, and all of the other kind of permutations of that. You've got almost 50% of traffic at Dubai connecting, although that's we looked back 10 years and 15 years perhaps, that would have been a much higher figure connecting, because Dubai's become a destination in its own right. Doha still very, very high in terms of connecting volumes.
I think you're understating Doha, because this data is always based on an onward connection within 24 hours. Whereas I think, you know, there is now a stopover product and market for Doha. And it's heading in the right direction, but I think that's probably near 85% is still connecting. So it's extremely dependent on this traffic flow. I think these carriers will bounce back. You know, they'll get both sides of their hubs operating as soon as they possibly can. I think the more interesting situation is what other inbound airlines are doing from markets such as Europe, where most of the European legacy carriers have cancelled services through to the end of March to the UAE. And that's going to begin to impact into the Easter holiday season, because, you know, kids would have been on holiday for the first few days. So that's a challenge. I think on top of that, there are airlines are already cancelling all of their summer programs to Tel Aviv. EasyJet have announced that today. And then you actually get destinations being dropped to the year end. British Airways have dropped Abu Dhabi again until the end of this year.
Yeah.
So
it's the ripple effect, isn't it? That's really hard to quantify.
What is it about Abu Dhabi that it can't? BA have been in and out so frequently. You know, it was one of the first routes dropped when they had the supply chain issues and the engines, and it's dropped again. Are they committed to Abu Dhabi, or is it just a sideshow?
Well, they've also got a hugely competitive local carrier who is in a different position to where they were two to 3 years ago in terms of their strategy and everything else. So I think there's a rush, isn't there, or there's an aspiration to want to be able to quantify what all of this means. And the reality is we just kind of can't do that. We're starting to see some actions. We actually saw the World's Travel and Tourism Council came out yesterday with an interesting report that estimated that the conflict is impacting international visitor spending by around $600 million a day, which is quite a astounding figure to get your head around. However, to kind of counter that and be slightly more positive, they did say that their research shows that tourism demand following security-related incidents, if you can call this that, can recover within 2 months if government and industry collaborate. And we're certainly seeing that in terms of how the UAE and the countries in the region are handling this. I think when we talk about the ripple effect, though, so airspace closures, this was based on Flight Radar yesterday. So, 2 days ago. So apologies, it may have changed. Fast moving situation. But that kind of illustrates the scale of the challenge. And what has been sort of occupying people's minds, I guess, are these air corridors, in terms of we've already seen significant ongoing long-term impact for European carriers who can't fly over Russia. We're now seeing a new narrow corridor. Well, it's not new, but lots of traffic being filtered through the Central Asian countries who boom time in terms of air navigation over flight fees, but not a position that they necessarily thought they would be in. I think one of the greatest challenges that we're going to see in this, we were talking about this just before we came on air, the global supply chain and interrelatedness of all of our economies. We all saw that very obviously during COVID. We've got oil prices. Again, this was, I think, Monday I pulled this chart, conscious that oil prices are so volatile at the minute that they've been back down below $100 and they're back up again at or above $100 a barrel. This is going to start to hurt, or it's already starting to hurt, isn't it? Economies, not just from an airline perspective, but from the broader perspective as well.
Simon, Qantas have announced fuel-related increases, haven't they?
Yeah, they have. They've come out today. Air New Zealand in region have announced a significant chunk of capacity being pulled as part of their response. They're obviously going through a recovery phase, Air New Zealand. So post-COVID impacts have hit them. Yeah, Qantas have come out and confirmed that they will have to increase fares on the basis of where they're standing on fuel. Now, Qantas are pretty switched on in this space. They're preeminent fuel hedgers. They understand the elements of fuel as well as any global carrier. But yeah, look, the inevitability is we've got Brent crude around $100 a barrel. In Australian terms, it's about $142 a barrel at the moment as it's standing. So it's the retail piece of this is obvious. Prices are going to go up and the input costs that go into travel. Fuel's obviously a key part of that. So it's interesting. It's interesting to say about confidence. One thing the market does retain a level of confidence, but obviously there's a lot of uncertainty at the moment. Australians particularly travel strongly. The outbound growth post-COVID for Australian travel internationally has been off the charts, really. It's about 12.5, almost 13 million trips a year. It's going to continue to grow, all things standing, to at least 15 million trips a year just of Australians leaving the country principally by air each year. Like we're a big cohort and attractive market, which is why the Middle Eastern carriers love this country and why Qantas continue to do extremely well as a group, and why Virgin have entered into their alignment with Qatar because there's opportunities there to fill the planes in both directions, right? And at the early days. The other week when this all kicked off, we had 30 Middle Eastern jet aircraft on the ground in our country, which is a size of a reasonable size airline in its own right. So that goes to show what sort of impact it can have very quickly.
That's the moment when the airport marketing team go out and take a picture of all the global brands on the edges waiting for the next 400 passengers to go somewhere. Deirdre, I think your flight radar chart is quite interesting because if you look at the market and you assume rather than flights, everyone who travels becomes a little ant and a microscopic ant flying somewhere or going from A to B. What we've got at the moment is this artificial blockage, and we're seeing all sorts of different changes in travel behaviour. We're seeing the Southern Cross routes between Europe and Australasia beginning to be a bit more interesting. So United and the US legacy carriers are picking up a bit of traffic that they actually desperately needed on the transatlantic because that's been soft for the last couple of months. So that's helped them. And you've got holidaymakers who thought they were going to the Maldives and Mali next week being offered the Caribbean. But the danger in all of this is suppliers, airlines, everyone responding to this, what we hope is going to be a short-term hiccup. As soon as that hiccup is over, and as you just said, within 2 months, and that the natural gravitation will be back through the Middle East. So, if you're a supplier and you think I'm going to suddenly refocus here or I'm going to take advantage, there is some opportunistic gains to be had by some parties, but you're not, at the end of the day, going to fundamentally change the way the people and the market behaves, which means as and when this event finishes, everyone's going to return to the Middle East.
And I think the Australian example just really illustrates that, doesn't it? I mean, we took a look at, so this was just looking at London to Sydney, and just looking back a year ago, March 25, to see the market share that the Gulf carriers have got. And as you said, significant. We also just took a look here at routings, alternate routings, and journey times. And actually, and then, just for fun, we looked at how long the journey would be if you went the other way. I think, and it's significantly longer, but then that's about risk appetite, isn't it? Was we were kind of saying earlier. I think the reality is that the market share provided by the Gulf carriers can't easily or quickly be replaced, and the reality of how the network of the Gulf carriers operate and the connectivity that they need to service and feed their networks is that you're right. This market it's not in a position where it can structurally change as a result of this conflict. I don't believe. So that suggests that it's in everybody's interests for this to be resolved as quickly as possible. But that's not how war works, is it? We all said that about Ukraine, Russia, and here we are 4 years on. So that's not a prediction, by the way. But yeah, it's an interesting one, isn't it? How could the industry have prevented this happening? I'm not sure it could have. It's part of how markets evolve and grow, isn't it?
Yeah, it is. And, is it too many eggs in one basket? Whatever you want to describe it, it is just, that's where the investment has been. It's, a very effective, expeditious way of getting from one half of the world to the other side of the world. And that capacity will come back. It's just a matter of how quickly it will come back. I firmly believe that easily within 2 months, Emirates and Doha will have their flights full again, because it's a natural way to travel.
Okay. Let's come back to the reason why we're here today. So we promised we'd talk about Australia, so we're going to talk properly about Australia now. I was kind of interested when we started thinking about this as a topic, and we knew we wanted to have another chat with Simon. I wanted to just take a look back over the last quarter of a century at how Australia's capacity has evolved. So this is just showing really that domestic strong growth through the first part of the 2000s and the up to sort of 2010. And then capacity really has sort of flatlined since then. It's been reflective of a mature market, I guess. If we look at average growth rates over the last 10 years, just 0.1%. However, international growth has really, as you said, Simon, been stronger. We've sort of seen, obviously, the significant dip as a result of the pandemic and a slower recovery, partly because of some of the important source markets. So we often think, when we think about market, we think about people flying out, but China has been an important market for Australia, with lots of inbound Chinese traffic for a number of reasons. And some of the lag that we see there in terms of getting back to the trend line has been a result of that. But international capacity is now above and recovering well. And we'll dig into some of that as we go. But Simon, does that kind of resonate with you and your experience?
There's a few stories here. So domestic story, which probably doesn't have the sex appeal, if you like, of our international market, but the domestic market is the bread and butter, the underpinning of aviation here in Australia, both in terms of our very large capital city pairs, as it's well understood, the Sydney-Melbourne city pair, which is best part of 9 million trips a year is, of course, one of the largest city pairs globally. The triangle, Melbourne, Sydney, Brisbane, Melbourne, Brisbane, Sydney, Melbourne, those three markets alone are significant amount of volume of traffic. But yeah, domestics had an interesting ride over that quarter of a century. You were making me reflect back a little bit. So with the Sydney 2000 Games, which was seen as obviously the dawn of where we may go as tourism and as an industry, and the tale has been an interesting one. What's happened in the domestic market in, I guess, that first decade, you had I'm probably talking a bit of self-interest here because I was part of this, but the rise of Jetstar. So Jetstar came into the market in 2004, but part before that, and with the collapse of Ansett, and then you had Qantas with a very large position, Virgin through Sir Richard Branson came in, Virgin Blue, ultimately these days Virgin Australia, obviously with a whole different sort of shareholding structure these days, but then Qantas Group put Jetstar into the market in 2004, and you did see some pretty aggressive growth by JQ within the Qantas Group, particularly the growing leisure markets like Gold Coast, should be well aware, Tasmania, all parts of regional Queensland, some of the New South Wales destinations, and ultimately the JQ Jetstar network sort of its tentacles grew. So you had that. Be fair to say though, the second half of that chart, you've seen pretty flat domestic capacity and domestic growth, and that's pretty fair. There's a bunch of drivers around that. It's maturing of that market. And some would argue it should have grown more. I don't want to get too much into the competition fundamentals, but you've got two very strong airline groups in the Qantas Group and Virgin Australia, who can pretty much control that market, all in terms of the two big players. And then obviously you have some regional players as well. Rex Airlines tried to grow for a bit, collapsed. Bonza Airlines were here for a moment. They gone. So you've had some attempts at sort of third operators, third airlines on those domestic trunks. Hasn't really worked. They've tried different strategies, hasn't really worked that well. But the best way for your listeners to view the Australian domestic market is doing well if it's growing faster than GDP. Last year it's pretty much nudged GDP. That's good. In some years it's been a bit below, and some years it's been a bit above. So stability, I guess, is a good thing, but that's sort of where the Australian domestic market sits. But the numbers are around about 60.5 million trips domestically. The regional piece pure regional makes up about 16% of that. Arguably comes out to about 1 in 5 trips, depending on what you call a sort of mid-sized regional market. But the bulk of it is still those big city pairs: Sydney, Melbourne, Brisbane, the emergence of Perth. Adelaide's very strong now. Lots of destination access out of Adelaide, and we're seeing really interesting evolution in airports such as Cairns. Tasmania's doing quite well. Darwin. They're all growing. Our big, if you like, 10 destinations are all got growth.
And I think actually that's really evident when we look at this is just capacity snapshot for March 26 versus 25. And I've shown capacity and frequency for those domestic, for those 10 biggest airports. And actually it kind of belies the trend, doesn't it? The annual trend, because you've actually got pretty steady growth across most of these bigger airports. Both in terms of capacity and frequency. So overall, country level, 4% up in terms of capacity, and frequency flights up just nearly 3%. So
absolutely. And so I can put the caveat on that. So that's absolutely correct. And this is a combination of the significant levels of investment that the owners of these major gateway airports are putting in. We can talk a little bit more about that later in the session. But also too, it shows that if you like, Australia, without getting too much in the social politics here, there's a few different speeds in Australia. So your bigger cities, the bigger gateways, if you like, are doing relatively well, or they're growing sustainably. Our number of our regions are doing okay, but there is a bit of a fall away in parts of Australia, and we do have a bit of some social dislocation and economic dislocation emerging. And so the regional and remote aviation scene is a different sort of story. There are some success stories, without doubt. Some of those have been driven by the fly in, fly out mining sector, and particularly into the WA ports. And we've seen some great innovation in some of our coastal airports and those destinations. I mean, Cairns is a great example. Far North Queensland, Gold Coast have done a really good job. Sunshine Coast is fast growing of our bigger airports at the moment on the numbers, because they've really invested in their product brand, and then they've tried to attract more airlines and are growing international operations. So they've all got slightly different approaches, but ultimately you've got that. The remote piece, the regional piece, whereas sparse countries have been very different, impacted by the Rex collapse. Qantas have changed the mix of their fleet, but still obviously very strongly serve it. Then you have a small number of smaller carriers serving those routes, but numbers of those regional smaller routes which aren't on that slide, they're actually not performing anywhere near as strongly as the broader domestic, and you can sort of see that in those numbers that you put up there.
I think that's the challenge, isn't it, for regional aviation, and we're seeing that in Europe as well, aren't we? In terms of these markets generally don't sustain narrow body daily or more frequently than daily narrow body movements, and so having the right aircraft and the right carrier to fit a regional market that is as important a contributor to its local economy as the bigger routes are to the bigger economies is the eternal challenge, isn't it?
It's a global challenge, isn't it? It's Australia, it's Europe, it's the United States, it's New Zealand, it's parts of Africa. It's how can you sustain these regional point-to-point services that are lifelines for these communities, but can't be operated profitably, or can't be operated at selling fares that allow them to be operated profitably. It's a real dilemma that has been created.
Yeah, and we're having a look at this at the moment. The Australian government here, through the Productivity Commission, their vehicle to look at these things is we've got a regional Productivity Commission inquiry underway into the determinants of regional airfares, which is an interesting name for it, but it's got a pretty wide remit, and they're now the commissioners are out looking at airports and airline operations around the country as we speak, and all the major submissions, including one from the AAA. We'll put ours in at the beginning of next week, and we won't pull any punches in that one, because there's some real opportunities, but there's also, we've got to address the issues that are in our regional and remote communities, and the airports are the key pieces of infrastructure for those. I grew up in regional Australia, so I didn't grow up in the complete dirt, but certainly I've travelled our great country many times all over, but I had a regional upbringing, and so saw regional aviation fairly close hand, and used to get around in 19-seat Beech 1900D aircraft for in the early days of business work. So I think many people have appreciation of it, but it's just the difficulty is, John and Deirdre, we don't have a lot of that 19-seat type of capacity currently in market. They tend to be larger aircraft, which is why with the Rex, with the new owners of Rex Airlines, with their sub fleet, that was seen as an important thing to try to keep going, because that was sort of a right fit aircraft, if you like, to suit a lot of these city pairs, or regional city pairs, which are still in existence. So there are smaller airlines with smaller fleets, but not to the scale of Rex, and Qantas have a larger fleet.
It becomes a real challenge, because if you're going to serve these regional markets, you probably need to be serving them twice daily. For that connectivity minimum.
Yeah, morning and night. Ideally morning, evening and night, but certainly morning each way, evening each way. It allows obviously specialists, lawyers, I used to jokingly say racehorse owners, people of that nature getting in and out of these communities, and vis-a-vis also allowing those communities to accessing health, financial and other services, and obviously VFR and levels of tourism in some of these pockets of the country where people will generally travel by air for that.
That by default means if you need that morning and you need that evening service, you've got to almost have an aircraft for every regional airport.
Yeah, in a way. Yeah, it's an interesting one.
The way it works.
Yeah, I mean, I'm actually a bit of an optimist about where regional aviation is going in Australia, and I think we'll see the evolution in terms of electric engines and where future fleets are going here. I mean, Australia has lots of airports. I mean, the AAA, we represent over 340 airports. So every airport that has a commercial function in this country, so there's at least 340 of them. They're members of us, which is great from a representative point of view. But obviously, we have a big diversity of airfield from obviously our Sydney and Melbourne, Brisbane, Perth airports through to some of our very, very small airfields that may basically serve the Royal Flying Doctor Service or agri aircraft and the odd charter flight, as well as obviously fast growing fly in fly out services. The mining industry, some of our major mining companies now own airports in this country, and they're becoming quite of scale. So you can see that level. It's a rich tapestry of difference.
You mentioned,
but still the fundamentals of the
electric aircraft. I mean, it's a subject that sort of is no longer top of the agenda and discussion, but is that a serious opportunity for these regional airports, or is it just playing the sustainability?
Yeah, it's probably controversial comment, I mean, but I think the opportunity's there, because I'm a believer that many regional communities in Australia, if they can connect through to a major capital city or a major hub, it could be a regional hub, such as, say, I don't know, a Dubbo or a Wagga. If you know your geography here in Australia, Newcastle airports just redone their terminal, and Newcastle's a major opportunity. It's a 1.5 million passenger airport these days, but they could easily be a regional hub. But it does need probably a combination of capital, innovation, and where the future fleets are. But there's an opportunity there, because if you can right size the route with the airframe, I think you do have those opportunities. And the other, I was in a session yesterday up in Parliament House, and the AAA is working with a lot of the it's called Regional Capitals Australia. So basically, we work with the major councils, a lot of the regional capitals, and a lot of the airports in this country are owned by local government. So it makes sense that the regional capitals own their airports or have the operating control over them, and they're working closely with the AAA. We've done some research together, which we're putting into the Productivity Commission. We're really using our heads and our lobbying power smartly to get the message through. But the region, as it was outlined, the regional capitals are growing very quickly in a number of parts of the country, and the airports are critical to them because they need to have that professional service appeal and that accessibility from business, health, education, commerce, visiting friends and relatives, and indeed tourism. So it's an interesting one. I just think it's an evolution. We're hoping that the Productivity Commission dives into this and really looks at some of the policy opportunities here to work with those that want to try to invest in these type of markets, and I think airframe is one of those solutions. And if hopefully an airline or airline group or investors will look at that opportunity in time, because I think it's a missing link at the moment. We do need that slightly smaller airframe with a commercial backing to do more into these markets.
We have an interesting parallel here, which is at the other end of the spectrum, where for 3 or 4 years, Newquay Cornwall Airport has, through the local council, had a PSO, public service obligation, to London Gatwick, which is funded by the council, who also own the airport. And it's attracted tourism, it's brought business, commerce, all of those sort of things, giving them a link to a major airport in the London system, access to low-cost carriers, access to intercontinental carriers, etc., etc. And the council have decided at 2 months' notice to drop the PSO funding, so the route goes at the end of March. And one of the arguments straight away is, well, actually, where's the airport going to get its revenue from now, guys? You've just taken away its revenue source because the route's been dropped. It's one of the few routes.
I think that's the reality, isn't it? That we know that local government, local authority funding is more constrained than it has ever been for a whole number of reasons, and finding a different way to look at the economics and the potential of these airports has to be the path that we go down.
But I bet Simon doesn't have potholes to worry about in Australia.
Do we not have potholes? Oh my gosh, you're trying to get me into politics here tonight, guys. No, actually, sadly, we have we have a lot more potholes than we used to.
All
I'll be careful what I say because
Yeah.
I shouldn't be getting into this space. But no, I think our roads aren't as well maintained, I think, overall as they should be. And there's a whole bunch of reasons for that. But part of it is this, the local government challenges in Australia, I sense, are not that different to the UK, many other parts of the country. And there's some very, very wealthy local councils, if you like, as we call them here. But a lot of LGAs, or local government authorities or organisations, are quite capital constrained. And there's a lot of sad examples out there at the moment, and in a lot of these communities, they have the airport as part of their asset base, but
Yeah.
to run those airports are even doing it as cost effectively as they can. In essence, they're a drain on ratepayers' money, but yet they're an economic enabler. And it's that balance of trying to maintain the airfield up to compliance, all the rest of it, at the same time, and then look at what those opportunities are. Growing some MRO maintenance opportunities, industrially, big box type of stuff in some of the slightly larger towns, through to aero schools. General aviation is still very strong in this country, but more in pocket. So it's trying to sort of wrap your head around what it can be. And one of actually things we have to do at the AAA is we actually talk to a lot of stakeholders about the opportunity there, because you've got growing communities and people look at the airport and go, well, how do we do more with it? But a lot of people in local government, not necessarily their core. It's rates, roads, and rubbish is sort of the 3 R's in this country, and the airport doesn't really sit into that vernacular in many cases.
And I think that mindset about turning the perception of an airport from a drain on resources to an economic enabler is key. It really is key. And I think you can only properly achieve that with this kind of collaborative government, business, stakeholders, communities coming together to recognise that. And that, it sort of feels like we're still in that cycle of education, of people needing to understand the importance of you have to use your local airport, and it can unlock growth, but only if everybody's pushing for the same agenda.
Yeah,
Okay,
I think so. We appreciate. Sorry.
Economic enablers, Sydney West. That's that's a really interesting story and an enabler, isn't it?
Well, it is an interesting story. So Western Sydney International, as it'll be called, last quarter, or probably the second half of this calendar year, we'll start to see the activity really take shape at Western Sydney. They're a member of the AAA. We're proud to have them, and obviously it's a Commonwealth-owned organisation at the moment. But there's a lot of investment gone into that airport. Best part of 6.5 billion Australian. So it's a beautiful runway. I've been out there a few times. It'll be a spanking airport. It's got a lot of the new IT in it. It will have a great future. There's no question. It's part of a very, very dynamic part of Australia, the Western Sydney. It's a reasonable distance from the bridge, from the coat hanger and the Opera House, but there's a whole population base out through that way, which should be well served by future carriers making the investment with the airport to grow that. And we'll have 2 competing airports in the Sydney Basin. You'll still see Sydney Airport as a very, very significant airport. The largest international gateway. That won't change anytime soon, although Melbourne Airport's hot on its heels as a competitor, and Brisbane's not that far behind. So we've got the 3, and indeed and Perth. So we've got 4 big airports here in this country to compete pretty vivaciously, ferociously, I should say, for more flights. But yeah, the reality is it's going to be a game changer, and you don't get many new international airports every day.
I was going to say it's the first new airport in Australia for 50 years. Is that right?
Yeah, it's the first. Well, yes,
International,
in terms of, I guess,
international
yes, in that scale. I mean, the interesting thing here is, it's probably not discussed enough. Australia currently, as we sit here tonight, tonight in Australia, we have 12 international airports in Australia, and next week we'll have 13 as Avalon Airport, Melbourne Avalon, the secondary airport in the Melbourne Basin, Greater Melbourne Basin, re-kicks off international flights. Sadly, they lost some international capacity when COVID hit. They had Air Asia down there at one stage, but the Qantas Group through Jetstar will start international flights there next Monday, actually. So that'll take it to 13, and then there's a number of other airports around Australia that are looking at short haul international opportunities into Asia, such as the west coast of WA, for example. So, yeah, I mean, it's because the international, with that slide earlier that showed the growth in the international in Australia, it goes to show that, a number of airports are investing in this, and they see the opportunity. And with the, particularly with the, the A321s, that future fleet, which can got the big legs on it, these type of aircraft can fly long range, and those pencil jets, if you like, can open Australia up to southeast, in particular Southeast Asia, Trans-Tasman, and beyond into the hubs.
And that takes me nicely, Simon, into my next slide, which focuses on international capacity at a little bit more granular level. So we just wanted to show here, this is for last year, for year-on-year capacity at the regional level, and where growth's happening. And I think we definitely saw the kind of shaking off the residual impact of the pandemic and getting back properly to growth. So strong growth across some of the very small regions, although scale means that you don't have to add a lot to get a high rate of growth. But across these kind of core markets, actually really strong, steady growth across New Zealand, the rest of the Southwest Pacific region, Southeast Asia. So you've obviously got Indonesia in there, Vietnam, Thailand, the Philippines, Malaysia, all the ASEAN countries. Strong growth again coming back to Northeast Asia, so China, Japan, which has become an important tourism destination increasingly, not just for Australians. There's been a real push into China in the last year or so, and of course the Middle East. Reflecting those volumes of aircraft that you that you referenced. Interesting to see that North America fell back, and there's nothing changing there in terms of the statistics. I think perhaps we're all a little bit hesitant about, well, maybe not all of us. Some of us are rethinking our America travel plans. Fair to say?
You are, Deirdre. But
yeah.
Simon, we were talking a couple of weeks back, weren't we? And you were saying, airlines were saying the US Pacific market was a bit soft for airlines, and obviously there might be a short-term gain for the next few months. But Qantas are dropping one of their New Yorks, I think, aren't they? They're going to 6 a week rather than daily, and there's a bit more capacity being shaved out.
I think it's at the edges. Trans-Pacific, look, the forwards in terms of the fundamentals for the route is actually positive. Like, Australian tourism has invested a lot in the brand in the US, and that is starting to bear fruit. You've got a number of US carriers directly serving Australia with growing capacity. Part of the issue, I think, part of the Australia-US story has been, I know it's always it's Trump, right? But let's put that to one side, and I think it's a simplistic discussion when really the fundamentals is that the US got very expensive for Australian outbound. To be frank, that's part of the things. Like, so it's a fun fact was Disneyland in California, Australia was like the third biggest market for Disneyland. Right, but but with the costs of just once you get to the States, and anyone that's a lot of Australians that go to the US are a bit blown away just by the costs, let alone the tipping, the 20% on for all your meals and all the rest of it. It adds up, and our dollar has been relatively strong, but we haven't been able to keep up in that respect. So I fundamentally, I think the Australia-US market will continue to be a good market, and it's naturally an inbound, outbound market. It's a bit of a combination. So I think that well suits. But the reason that some of those numbers are so strong is that the Australian outbound has been 10% plus compound year on year since COVID, and since the government allowed our borders to be reopened. And then the inbound's taken a while to catch up because of the just, as a country, we declared we wanted to stay closed, and for longer than many other parts of the world. So they're the facts, and it just took a while, obviously, for
it is interesting. I mean,
to pick up.
My wife and I did a trip on New Zealand and Australia pre-Christmas, and my wife will nearly talk to anyone. And she was talking to quite a few US holiday makers who were saying, actually, we're looking for a home here and coming to move to New Zealand or Australia, which I thought was interesting. And the other thing, to your point about purchasing power, the last webinar we did, we were talking, and the price of a Disney World ticket has increased by nearly 100% in the last 5 years.
Yeah.
You know, so it's no wonder that tourism.
I think there's a reset, isn't there, in terms of and the US is an interesting one, because generally people may have been more than once, and so you have a sort of perception or a baseline about the cost of a holiday and the cost of the add-ons on the holiday. So beyond the airfares, into the hotels and the cost while you're there. And I think actually what we've seen, I was in the US this time last year, and I still feel a bit scarred about how expensive it was. But actually, isn't that true of almost everywhere in terms of European, North American, and even the Middle East markets and parts of Asia? So I think there's a shift into everything is generally increasing in cost, and maybe once people get past that, in terms of because we came back from the US sort of saying, well, it was still a great holiday, though it wasn't, it cost a lot, but we wouldn't not go back because it was so expensive. So yeah, interesting. I think when you look at going down to the country level, you're really seeing that strength of growth. And I'm not apologizing for including the 2019 baseline here, because I think it's kind of relevant to some of this, that what you've actually got now is significant growth. There's Indonesia, so the yellow line is this March, grey line is last March, and the black line is 19. Huge uplift there, sort of really illustrating what you were saying, Simon, in terms of unlocking outbound travel. China's back. The UAE is obviously impacted by what's happening, and look at that figure with caution. Malaysia, Japan, yes, strong pockets of growth across a number of countries.
Japan is as much an outbound market, given the weakening of the yen.
No, it is. Australia, Japan. It's it used to be about an almost 85% inbound. It's reversed a lot. So Japanese inbounds come back fairly well, but it's a predominant outbound market now. It's a top 5 outbound market for Australia. It's some of the best powder snow in the world, right? From a skiing perspective, and Australians are big skiers. You find that ironic. We don't have that many snowfalls, but I mean, the Indonesia story is obviously built around Bali, and 1.7, 1.8 million Australian trips alone through to Denpasar Airport each year, or the bulk of them to Denpasar through Denpasar. So that just the appeal of Bali as a short break, longer break. A lot of Australians have businesses and houses up there now. That just correlates, and you've seen that through. China's been a pretty good story, actually. It's just slowly, bit by bit, come back in both directions. We have a large student market, a lot of VFR. So yeah, all those, you can see where the growth has been, but the Australian outbound story is a very, very good one, and obviously should appeal to airlines about the opportunity of that you can fill the planes in both direction and do it through very competitive, efficient airports.
Which is the goal, isn't it? To have that bi-directional traffic. That really is the aim, isn't it, for a carrier?
Yeah, absolutely. I think Japan's been a great story there, and the appeal of Japan is it's been a bit of a global sensation, particularly post-pandemic. But you know, Australia's been able to, I think, Australian airports and airlines have worked, and the airlines have worked well to develop that market. Like even out of Cairns, you're seeing a number of Japanese points being served out of Cairns, and that ability to combine that domestic and international experience. It's just as I'm outlining, a number of airports have been quite innovative in how to develop some of the opportunities that are being presented. And when you've got over 60 airlines serving our country now, you have these opportunities to look at doing things a bit differently. And it's been working well. Let's get through what we're going through at the moment, and we can get back on that steady path, because clearly aviation has now popped in this region, and particularly in Australia, and we really wanted to keep it there.
And key to that, of course, is unlocking fast access into the country, isn't it, Simon? I know that's a hot topic
Yes.
as well, in terms of how the market actually, you know, for both Australians returning from overseas, but also to facilitate tourism access, having e-gates at the border, and all of the kind of supporting infrastructure to go along with that is critical, isn't it?
Absolutely. It's about getting rid of one of these, and
That's it.
only one of them.
So, but in all seriousness, it's really important that we get rid of the arrivals card, not just because you won't be able to make a new friend on the plane or when you're filling them out, because no one travels with a pen anymore, but in putting bad human one side. It's actually about pushing us to getting us in a position where we can basically work towards a Changi experience by 2030, and integrating seamless travel and the biometric supports in and around that. So the good news on this, has been some wonderful trials at Brisbane Airport, Sydney Airport, involving Qantas, involving a couple of our key agencies in terms of Australian Border Force, who obviously operate the border in this country, and our Department of Agriculture, for want of a word. So because the biosecurity aspect of is important for this country. And look, the trials have gone extremely well, about creating basically a digital arrivals card through an app, obviously. And the trials have gone well. What we need is we have a passenger movement charge here, $70 per passenger, Australian, very high, as I heard you suck up the air there, John. And
wow, yeah.
and that should be funding this type of reform more and more quickly. And so we hope we're on the pathway now to get that sorted. We've used the 2032 Olympics in Brisbane as sort of like, let's get it sorted by then, but in reality, we'd love to see it in place by 2030. And our big gateway airports, Sydney, Melbourne, Brisbane, Perth, where they do well over 90% of the international traffic currently, they are bursting at the seams on many peak periods across many days, because of how do you more quickly process people safely, efficiently, but importantly that efficiency piece as well. So people experience a different relationship overseas around these type of important processing than they do here, and we need to change that round. But it's also about how we can better use the airport infrastructure, so that we're not potentially having to build bigger halls to man to deal with all the people coming through.
Which kind of feels counterintuitive, doesn't it, to how we all feel like technology should be evolving and helping support this kind of processing activity.
This is Simon. You're setting up potentially one of the greatest disappointments of travel to Australia, because for the last 40 years we've all watched TV documentary programs about your customs people opening packages and suitcases and stopping anyone from getting in the country with, perishable products or whatever it happens to be. And we all expect that as part of the price. That's what I pay my 70 Australian dollars for. And now you're going to make it seamless, and it's going to be so simple to get into the country.
Well, there's a bit more to it than that. I know where you came from, John. They're not bad shows, those, but gee, people bring some funny materials in. There's no question about that. And sadly there's some nefarious trade goes on as well. But really that's the point we're trying to make, is all of that behind the scene activity will still still occur. It's just about using biometrics, the U plus the real U, the real John and the current John type of thing, so that we map who you are. And this is not groundbreaking stuff, and many of the gateway airports and big airports around the world obviously have this in place. And some of our airports, like Sydney Airport, do well over 40 million passengers a year. Melbourne Airport are nudging 40 million a year. Like, they're pretty big airports. Like, I looked at it the other day against some of the comparative European airports, just for a bit of a mind check. And our airports are getting pretty big in scale. Some of our really big ones, and some really exciting growth happening at, some of the other ones I've talked about tonight, Brisbane, Perth, and others. So we just need this, and it's the right thing to do. And it's seamless travel brings a lot of benefits, and we think it's obviously it's a better customer experience, and it's a better use of the airport infrastructure, and we just think it's a bit of a no-brainer. But we just got to get there now, and we have to work with the Commonwealth, because the federal government manage the border, and we need to work with them on that.
I guess for me, with all of this, enhanced screening and digitisation and efficiency, the best I can hope for with my passport is maybe an international journey to the Isle of Wight. Australia's out, the United States is out, where I can't get into Europe because I haven't done the process.
Yeah.
Deirdre.
Well, I don't know about that. We might have to close that border, John. Not sure if we want to let you in.
Yeah.
Unfortunately, we're kind of out of time, so we're probably going to have to wrap it up pretty shortly. What an interesting discussion, and it sounds, Simon, certainly as if things are aligning right across the industry. You've got capacity, new capacity coming on stream. You've got a sort of enthusiastic market that loves to travel, and notwithstanding the kind of current circumstances, an industry that's kind of in growth mode, particularly, I guess, in your part of the world. A final thought from you, and then I guess we'll wrap it up.
Oh no, I think that's a great summary, and thanks for the opportunity. I look, the upside for aviation and the ecosystem in and around Australia, the industry here in Australia is definitely more glass half full and glass empty. We do have challenges, particularly around, I think, cost generally, and then how we deal with the regional and remote aviation. There is opportunity there, but also that challenge of keeping that as sustainable as possible. We obviously want to continue to grow and grow sustainably. The airports are making significant investments in infrastructure now and for the future. We need to make sure that remains, that we're competitively able to do that, so we can facilitate the custom of our airline partners. Of course, I'd say that, but it's actually really important. Our airports need to continue to evolve and grow, and put the right stuff in terms of infrastructure that meets the needs of the customers and meets the needs of our airline partners. And you can see where it's working extremely well. And with $44 billion Australian in investment that's coming down the pipeline, just within our big four airports alone, it's 33 billion, and then we've got Western Sydney Airport coming online later in the year, so which is obviously many billions of dollars, so outlined upwards of over 6, so in Australian dollars. So you can see what's happening here, and it's really very exciting. And at the same time, obviously, we need to have the market fundamentals working the right way, and hopefully we have a fairly safe and secure world. And at the moment, obviously, there's some challenges there.
Brilliant. Well, thank you, Simon, for your fascinating insights as ever, and John, thanks for your contributions. We will be back in just a couple of weeks' time. That feels scarily like when we used to do these once a week, but we wanted to throw in this extra one. Thank you all for your engagement and involvement today. If this was your first OAG webinar, you can sign up to be informed about the programme. We generally do them once a month, but we're not averse to little extra ones. And we also put out regularly blogs that kind of cover topical issues in the industry, so you can sign up for those. We will send a copy of the recording and the slide deck out to everyone who's registered later today. And we look forward to seeing you all sometime soon, maybe on the next webinar. Thanks, everybody.
Thank you.
Thank you.